Welcome back to my YouTube series on personal finance for college students. In this lesson, we'll cover what is FAFSA, the forms of financial aid, and what loans to avoid. You can find the full-length lesson on the Udemy site. That lesson will include tips on filling out FAFSA forms to maximize award amounts. FAFSA is the free application for federal student aid. It is a questionnaire of family finances to help determine how much a family can contribute to a student's college education. The form itself doesn't tell you how much award money you receive, but only determines the EFC, which is expected family contribution. Colleges use the FAFSA results to determine your eligibility for federal, state, and college aid. That includes grants, loans, and work-study. Your aid package is a calculation of an institution's cost of attendance minus the EFC. Here's a short list of terms related to FAFSA process. The full list of the useful glossary of terms can be found online at the studentaid.ed.gov. The award letter is the offer from the college or career school that states the type and amount of financial aid. That's going to be your actual dollar amounts. The promissory note is the binding legal document. Think of it as you're promising to pay back the money that they offer you. The Student Aid Report, or the SAR, is a summary of the information you submitted on your FAFSA. This is the result of you filling out your FAFSA form. The Adjusted Gross Income, AGI, is your family's wages, salaries, interest, dividends, and everything else, minus certain deductions from income as reported on your federal income tax return. The cost of attendance, COA, is the amount it will cost you to go to school. This is usually stated as a yearly figure and differs college to college. Your expected family contribution, EFC, is the number used to determine what eligibility for federal student financial aid you will have. There are different ways to pay for college, and they're not all the same. Here are the types of financial aid you can receive and the order that you should accept them. Scholarships are your best bet for paying for college. Scholarships can come from all different avenues. Scholarships generally do not have to be repaid, but may come with stipulations such as maintaining a certain GPA. There are thousands of legit scholarships out there, but scholarship scams are on the rise. Never pay to apply for a scholarship. Grants are your next best option for college. They are based on financial need and do not need to be repaid unless you withdraw from school. The largest federal grant available is the Pell Grant. Federal Work-Study provides part-time jobs for undergraduate and graduate students with financial needs, allowing them to earn money to help them pay education expenses. The program encourages community service work and work related to the student's course of study. Scholarships, grants, and work-study are the best ways to pay for college without going into debt. Out of the types of loans available, subsidized loans are the best option because of the interest on the loans is paid by the federal government while you are in school. It isn't until 6 months after you graduate that the loans start to accrue interest. An unsubsidized loan means you're responsible for paying all the interest that accrues. If you choose not to pay the interest while you're in school and during the grace period, your interest will accumulate and be added to the principal amount of your loan. Even if a student doesn't qualify for federal aid, students may be eligible for state-based aid. States provide students more than $10.2 billion aid every year. Each state aid program is different. Usually a student must reside and attend college in the state providing his or her aid. In some cases, a student can spend state aid on colleges in neighboring states. Some colleges do offer their own loans. Colleges will use your FAFSA form to determine if you qualify. Each college that you include on your FAFSA will send you an award letter detailing out the award package that college can offer you. Award packages differ from college to college, and the letter itself is not standardized. It is important that you thoroughly read the award letter. Make sure you understand what is being offered. Scholarships, grants, work-study, and loans will be all listed, and sometimes jumbled up and given abbreviations. If you don't understand each line on the award letter, contact your school to get a full explanation. You will need to make sure you understand what money is being offered that doesn't have to be repaid and what money must be repaid under what terms. You do not want to accept a loan and have unfavorable terms. It is possible to only accept part of the award package. To determine a college's affordability, first find the cost of attendance for that school. It should be on the award letter. If not, ask the financial aid office. Make sure it includes all estimated expenses, not just tuition and fees. Next, subtract the free money offered by that school. That includes scholarships and grants. Then subtract any college savings funds that can be used on that school year. The amount that remains is your out-of-pocket costs that may be paid for by student loans. Again, not all student loans are equal. Next, subtract out subsidized loan offers. These are your most financially favorable. Then subtract the unsubsidized loan offers based on terms. Terms will not be listed on the award letter, but you should be able to find those online. If at that time there is still remaining costs, I ask that you consider alternative college options. Those include attending a lower cost college, attending a community college, and deferring admittance to that college so you can work and save money. After you exhaust government and college aid, students will look to less favorable options for paying for college. Even those families have used the following options for funding college, they can be financially disastrous. Private loans generally charge a higher interest rate than federal ones. Worse, private loan interest rates are often variable, which means that they can fluctuate with the market. In other words, a loan that starts out charging 5% can, and often does, rise into the double digits. Most will require a cosigner, which will usually be a parent. If the student falls into default for the loan, the parent is on the hook to pay. A mortgage cash-out loan is a new loan. It replaces your old mortgage and becomes your new first mortgage. Closing costs are required when you refinance a mortgage. These loans are collateralized by your home, and if you can't make payments, the lender can foreclose on the house. 401k loans. If you withdraw funds from your 401k before you are 59 and a half, you may owe a 10% premature distribution penalty on the withdrawal. This penalty, in addition to income taxes you will owe on the withdrawal. You only have 5 years to repay the loan, and it will ultimately impact how much you have for retirement. You may be told you can borrow against your cash value whole universal or variable universal life policy. This can potentially be very dangerous. Unpaid interest will be added to your loan amount and will be subtracted to compounding. If you have a variable universal life policy, you may also be charged an opportunity cost. And then, if you've already listened to the lesson on what to avoid, you know short-term payday loans or cash advances are one of the worst loans ever. These loans in some form are illegal in 30 states. The interest and fees are astronomical and teeter somewhere above 200%. Never ever consider these types of loans. There's a lot of information out there to help you better understand your financial aid options. Here are some of the best resources I've found while researching this topic. I will caveat with the FAFSA.com website. .com means this is a business, so even though they do have great information, you will see advertisements for their personal service. I don't recommend paying for advice unless you've exhausted other options. My last tip is to like your financial aid office on Facebook. Aid offices will post scholarship offers throughout the year. Here's the list of additional lessons on this series. If you're looking for tips on how to maximize your financial aid, check out this course over at the udemy.com site. And as always, like Simple Saving Habits on Facebook for other tips and tricks for saving money.